silver has actually averaged over a 300% gain in the rate cutting cycle. So the last three were 2000, 2008, and then in 2020 when COVID hit. So it could be very exciting going forward for silver. As we know, rate cutting is about to start. SIL, the gold and silver ETFs, when gold was higher a couple of months ago, you saw these ETFs actually at higher levels than they are today when other central banks will raise rates. And at one point, they pause. So they've reached that point where they stop raising rates. The rate stays at its peak for a while, and then they eventually start cutting. So what happens with gold is that gold tends to take off when you reach a point where the central bank has paused.
When central banks start cutting rates, silver has historically shown significant gains, averaging over 300% during the last three rate-cutting cycles in 2000, 2008, and 2020. With rate cuts expected soon, silver could see substantial growth. Additionally, gold and silver ETFs were at higher levels when gold prices were higher a few months ago. Typically, after central banks pause rate hikes, gold prices tend to rise, especially once rate cuts begin. Recent research highlights a significant surge in Chinese demand for silver, reaching record levels over the past 15 to 20 years. Peter Krauth, a resource sector expert with over 20 years of experience in commodities and precious metals, briefly explains that demand is driven by both investment and industrial needs, particularly in the solar industry, where China dominates with 80% of global production. From 2022 to 2023, silver usage in solar energy jumped by 64%, from 118 million ounces to 193 million ounces. The Silver Institute projects a further 20% increase to 230 million ounces in 2024. Despite this growing demand, silver supply has remained stagnant at around 1 billion ounces over the past decade, creating a structural deficit of about 20%. Silver demand has increased significantly, supported by various policies, but the price hasn't seen a major jump. This is partly due to the accumulation of secondary silver supply, which includes above-ground inventories in futures markets, ETFs, and private holdings. Until 2021, these inventories were steadily accumulating, leading to surpluses of a few million to 50 million ounces. However, starting in 2021, these silver inventories began to decline sharply. Despite rising demand, the silver supply has created a structural deficit of approximately 20%, exacerbating the supply-demand imbalance. As you watch the video clips, please take a moment to like, subscribe, and hit the notification bell to stay updated with our latest uploads. We appreciate your support. Enjoy the video.
Almost literally off the charts. This was research that showed 4-month return. A 4-month measure of silver imports into China, and they had set a record high going back about 15 or 20 years. So it was pretty phenomenal to see. I think it's a combination probably of investment demand as well as industrial demand. But I think, it's fair to say that if you look at where most of the demand from China for silver is likely coming from, it's more than likely solar, given how it dominates solar production at a rate of about 80% of worldwide production. So that continues. And, if you look at the jump from 2022 to 2023, we saw an incredible 64% increase in the amount of silver going to the solar industry. So that was about 118 million ounces to 193 million ounces in 1 year. And now the Silver Institute forecasts that we're going to see this year's demand from solar go to about 230 million ounces. So another 20% increase over last year. So it's just phenomenal. And I'd like to really point out something I think is significant. You can go back as far as 2015. So you go back 10 years. There has been no meaningful increase in total supply of silver if you look at supply coming from mining and from recycling. So that's about roughly, say, 15% from recycling, about 85% coming from mining. That's been right around a billion ounces for the last 10 years. And yet demand has grown to about 1.2 billion ounces. So we're in a structural deficit to the tune of about 20%. It's just really, it's phenomenal, really, what's been going on in this market. Or the silver price gained and demand certainly increased and stayed up. Uh, Certainly because of a lot of the policies that were brought in, but we didn't see a huge jump in the silver price. And I think what happened was, before I talked about the silver supply, and when I talked about the silver supply, I said that silver supply was really from, if you look at total supply, coming from mining and from recycling. But it's important to consider that there are what I call a secondary silver supply, and this is what is above ground inventories. Now, these above ground inventories, up until about 2021, had been mostly accumulating. There were surpluses to the tune of anywhere from a few million ounces to maybe 40 or 50 million ounces for a few years. Well, those accumulated, and they ended up in different places. Places like the futures markets. They ended up in ETFs, for example. And it's hard to estimate. Nobody knows exactly how much silver supply sits. You can look at these markets and get numbers from those markets, but there's obviously silver that people will own privately. Corporations or funds will own physical silver privately as well. But the point being that up until about 2021, there were these smallish surpluses that kept accumulating in this secondary supply of silver futures and ETFs and private hoards. But where you can get this clear data is from the futures markets or from the ETFs. And only starting in about 2021, you saw silver inventories start to drop pretty dramatically.
The silver price has been capped around $28 to $30 despite strong demand and a structural deficit. This is because industrial users have been able to tap into secondary supplies, such as futures markets and ETFs, to meet their needs. Since 2021, these inventories have been significantly drawn down by about 60 to 70%. Peter Krauth, in an interview with Dunnigan Kaiser, says although some stockpiles remain, they are depleting quickly, and if they run out, it could trigger a major silver squeeze. Miners haven't been able to keep up with the rising demand, and as secondary supplies dwindle, this is likely to be reflected in higher silver prices soon. Recent news shows that silver mining stocks have seen a boost due to rising silver prices. The physical precious metals market is tight, with retail investors returning strongly. Major retailers like Costco and Walmart have entered the bullion business, with Costco selling around $200 million worth of gold and silver monthly, amounting to over $2 billion annually. This surge is driven by concerns over inflation, as people seek alternatives to protect their buying power. The rising gold price nearing $2,500 has further spurred interest in precious metals as a safe haven. The Bullish Percent Gold Miners Index, BPGDM, which tracks the percentage of gold miners trading with positive momentum, indicates whether the market is overbought or oversold. When above 70, it's typically overbought. Below 30, it's oversold. Currently, the index is around 78, suggesting an overbought condition, and it recently surpassed 90. This, combined with commercial traders being net short in both gold and silver, points to a potentially overheated market. Let's get back to the interview.
How come the silver price seems like it's capped around the $28, $29, $30 level? If there's so much demand and the demand is growing and there's a structural deficit, demand is at more than 20% past supply, mining and recycling. And so I did some research, and to me, the answer was that industrial users, in particular industrial users, were able to tap into this secondary supply. They could go to the futures markets, they could go to the ETFs, they could hold long futures contracts, let them mature, and then take physical silver in delivery. They could hold ETF, buy an ETF with cash and say, the next day, I want delivery. And if you own enough of certain ETFs, you can take physical delivery of the underlying metal. So that's what I believe that they've done, because we've seen the inventories in these different sources actually come down pretty dramatically since early, depending on which market, from early to mid 2021. And I think that's what has, since capped the silver price. You've had this big consumption of silver that was able to go to stockpiles of silver, really, without forcing miners to produce more to meet this excess demand. Well, those stockpiles have been drawn down. They're not completely empty, but they've been drawn down pretty considerably. I'd say to the tune of about maybe 60 to 70% overall. So there's a little bit of an overhang that can change overnight. I think at most we've got, at this point, maybe 6 to 12 to maybe 18 months of that ongoing. I'm not even sure that, these inventories would allow themselves to be drawn down quite that much to have, to be almost at zero. If they did, it would be dramatic, and someone would come and have one of these contracts and say, okay, my contract is now matured. I want delivery. And then the exchange has to tell them, I'm sorry, we're out of silver. You're going to have to take cash, a force majeure, and you'll have to take cash instead of the physical silver. And they'll say, no, I want the silver. And that's when we'll hear about it as a headline. And that would be a spark that would, just sort of ignite a big silver squeeze. So I think that has been, as I say, a bit of an overhang over the silver price. That's going away. We've seen these inventories really shrink. And going forward, I think that that's going to be very much reflected in the silver price. The miners have proven themselves unable to keep up with this increased demand. The markets are quite tight, especially, on the physical side. It's impressive. The retail investor certainly has come back into this market. And I have something I'll come back to in a moment. But the first thing I want to say is that you've got some big retailers that have now gotten into the bullion business. You've got Costco that's been selling for some time, gold and silver. Walmart has gotten into that as well. Costco is now selling anywhere from somewhere around $200 million worth of gold and silver per month. That works out to, if my math is good, almost to over $2 billion a year. I mean, it's just $2.5 billion a year. It's just tremendous. Costco alone. And by the way, Costco, it's one of the few things they will not take back from customers. No returns on gold and silver. Walmart is now selling this. And so it's tremendous. People have really, I think the inflation bug has really started to bite. People realize now they are looking for alternatives. They are realizing what precious metals will do to help protect their buying power, and they've turned to this market. They see what it can do for them, and has been doing. Gold at $2,500. That's really no doubt setting off a light bulb in a lot of people's minds. Bullish percent gold miners index. So this you can track yourself. It's BPGDM is the index, and it's a percent. It tells you the percent of gold miners that are trading in a positive momentum or in a negative momentum, or at multiple week highs. And if you're anywhere above 70, then it looks typically overbought. If you're anywhere below 30, it's looking oversold. Well, right now, last I checked, we're somewhere around 78. And so it's certainly overbought. It's been at over 90 recently. That doesn't mean it can't continue to be even more overbought. But if you combine that with what I was saying earlier about how commercial traders are net short in both gold and silver, I would err on the side of caution.
The silver market is set for potential gains due to historical trends during rate cuts, rising demand from China's solar industry, and declining secondary supplies. A squeeze in silver could drive prices higher, especially as central banks consider rate cuts, increasing interest in silver and gold as safe havens. Do you agree with Peter Krauth's predictions? What will the silver market look like in the future? Let us know in the comments below. For more content like this, don't forget to subscribe to our channel, hit the notification bell, and explore our other videos. Thanks for tuning in.